Dividend stocks can get you in some major trouble, especially if you are a new investor and not paying attention to how the stock is actually performing. So in this video, I'm going to break down which dividend stocks aren't always the best and break down on a whiteboard exactly why they can harm you. Let's go ahead and break it down. Now, dividend stocks are extremely popular because the allure of passive income is amazing. I put money into a stock, that stock hopefully grows, and I can count on a solid check each and every month that is broken out through quarters. Great. But not everybody pays attention to what they are investing in, and sometimes you can end up buying a stock that pays a dividend but turn around and actually lose money. So to illustrate this, I'm going to give you an example of AT&T, an extremely popular dividend stock that millions of people love. It pays a 7% dividend. That sounds good. 7% passive income. But let's actually look at some of the math behind it. So for example, again, we're going to talk about AT&T. Let's go ahead and go to the whiteboard. The stock symbol, feel free to do the math along with me. The stock symbol for AT&T is T. And let's say you have 100 shares. Okay, and right now, and again, to make the math very simple here, we're going to round a bit. Obviously, feel free to follow along based on where the stock price is right now, what the dividend is at the time that you're watching this. But for math purposes, we're going to go ahead and say it is $15 per share, which means that we would have spent $1,500 in this case. So just even 100 shares, $15 a share, $1,500. Okay, that's what we have. Now, we have made this particular investment, and because the dividend for AT&T is right about $1, I think right now it's $1.11. Again, very simple math. This means that every year we are going to get $100 in dividends. Okay, great. Every year I get $100 in dividends for my $1,500 investment. This would be great if it was the only part of the story. But if I look at AT&T over the last 6 months, it's lost about 17%. If I look over the last 5 years, it's lost almost 20%. But let's just look at the last 6 months. It's the exact same time frame that we talk about on this channel all the time. So if I am looking at AT&T, it's down 17%. That's really going to leave me with about $1,245. And I would add in my dividend here of 100, and that means that my final return here is really going to be, after year one, I'm going to have $1,345. I lost money, guys. Okay, I lost money in this particular instance. Now, this is a best case scenario, and what I really did is take the entire year. Notice, let's say the last 6 months. So if I go back to the whiteboard here, because you haven't invested the entire year, you're really only getting $50 at this point in time, and that is $12.95, and that return is even worse than what I showed you earlier. You have a dividend, you've bought a company that has paid a solid dividend for a very long time, but you still lost money. This is the type of math that you do need to go through and kind of think about as you're investing. This is one of the reasons why anytime I do a dividend stock list, I rarely will pick a stock that's down and down like AT&T has. Again, it's been down for more than 5 years. That's really not going to really work out in your favor, even if you are to consider the risk versus reward here. So think about it. If you put the same $1,500 in a company like AT&T over the last 5 years, you probably would have made about $200 in profit over 5 years. Like, y'all, that's less than $50 a year in profit. You could have put that into a high yield savings account and gotten a better return. Right now, a savings account for $1,500 and some of the accounts that we have talked about on this channel that pay close to 4%, you can get $60 per year and take nearly zero risk. After 4 years, where are you, right? After 5 years, you've hit over $300 just sitting there in a savings account and not risking losing 10, 15, 20% per year like AT&T has, especially over the last 5 years. I don't have the numbers in front of me. I'll make sure they're on the screen. But if I remember correctly, I think AT&T has had maybe one positive year out of the last 5. I think that 1 year they were up like 36%, which is great for that 1 year. What about the rest of them? right? That is the thing that you have to be careful about when you're talking about dividend stocks, when you're investing in dividend stocks, because I see far too many people just diving out there into Target, AT&T, Verizon, and all these companies without doing the math first. And that is the key thing. I am not telling you not to invest in any of those companies, though I'm not a fan at this point in time. But my thing is, do the math. How many shares are you going to buy? What are you expecting to get with that dividend? And is that going to help you or is it not? And is there something that is even safer for you to do without that level of risk? That is the main point. Now, obviously, the stock market changes. There are times, and there have been times where I thought Target was a great stock, and it was. And then things change. So I'm not saying never invest in any of these stocks. I'm not saying never to invest in any dividend stocks. I have an entire video about dividend stocks and what I think are the best ones. My point to you is this. If you are looking for a dividend, see it as a bonus. See it as something that is extra on top of a company that is good, that is solid, that is growing, and that dividend is just a little extra for you. So it might not be 7% like an AT&T, but maybe 1.5%, maybe 2%, maybe 3% is good when I see that the company is growing 10 or 15% per year. That is an ideal scenario because I'm making money from the investment. So instead of just having $1,500, maybe it goes from $15 to $2,000 and I get a dividend. Maybe it goes from $2,000 to $2,500 and I get a dividend. That is the better way I think that you should approach it. So now, if you are looking at this and you're like, well, you might be right, AT&T might not be for me, but what are some shortcuts? What are some things that I can use to find better dividend stocks that could be a good fit for me right now? I'm glad you asked, because this is the video that you need to watch next.